Good afternoon, everyone. It's great to be here again. And thank you for joining us. It's my honor, and it will be my honor in a couple of hours, to present the 2026 Ontario Provincial Budget, a plan to protect Ontario. The last year has been marked by significant change in the world around us. And while our province has been meeting these challenges head-on, we need to recognize that Ontario does not operate in isolation. We're part of a vast network of global trade that until now has created certainty and growth for generations of workers, families, and businesses in this province and around the world. But geopolitical forces that may have once felt distant have now reached our shores. Global economic and trade tensions, supply chain disruptions, shifting markets. Simply put, the world has changed and we must change with it. This is why today's budget is so important. It is about creating jobs, increasing our competitiveness, and growing our economy. C'est un budget responsable, prudent, un budget qui remettra de l'argent aussi dans les poches des contribuables, all while keeping costs down for families and businesses and delivering on the programs and services that people efficiently and sustainably rely on. Our plan is cautious where it must be and ambitious where it should be. Thank you, and I'd be pleased to take your questions.
Questions from the media. If you could stand up and line up at the microphone and have one question and one follow-up and state your name and outlet.
Thanks. Hi, Jeff Gray, Globe and Mail. Hi, Minister. I'm hoping you can explain, you've touched on it in your remarks there, but maybe with a bit more detail to justify such a larger budget deficit than you had just projected in the fall. Why is it so much larger?
Well, you know, this is the world we're in. And of course, I'd prefer to have a smaller deficit. I'd prefer to balance sooner. But we have to live in the world we're in. And we have now many challenges in front of us. I will say a couple of things. Number one, we've cut taxes. We're cutting the HST for all new buildings for anybody to buy. That's $1.4 billion. We're accelerating the capital cost appreciation over 4 years at $3.5 billion. That will create the environment for more investment to create jobs. We're cutting the small business tax. So tax cuts are definitely a factor. The other is that you know, we've come through COVID. We've come through pretty high inflation, supply chain disruption, and tariff and population growth. Some 2 million people in the last, since we took power in 2018, two-thirds of which is just since COVID. That's put a lot of pressure on our expenditures. And I've always said we are going to make sure we continue to fund world-class education, healthcare, social services. So we are delaying our path to balance by 1 year. I think it's the quickest path to balance of any province in Canada, including the federal government. And as well, our deficit to GDP, our economy, is amongst the lowest in Canada. So we're being good fiscal managers, but at the same time, we're investing in our public services and putting more money back in the pockets of families, individuals, and businesses.
Thanks, Mr. Just on that point, though, about the balancing of the books, this isn't the first time that the goal has been pushed forward. It's been pushed forward again. Should voters maybe look at when they ask their kids to clean up the room and they say, I'll do it right after I finish my video games, I'll do it after hockey practice? Are you the minister who just keeps putting off the task that you need to do, which is balance the books? No offense to my own kids.
Yeah, no, I'm the minister who sits on the edge of the bed and says, you know, the world is a little bit more uncertain now. Look at jurisdictions around the world that are challenged in their fiscal situation. I mean, south of the border, I believe their deficit is almost 6% of their GDP. Ours is the third lowest in Canada. Look across all the provinces in Canada. Every one of them, virtually everyone, has increased their deficits because this is the moment we're in. So I'd explain that to my daughter or son. But I'd also tell them that we're going to get through that because we do care about future generations. And this budget, as much as anything, is about building prosperity and infrastructure for future generations.
Hi, Minister. Jack Howard from the Trillium. I'm curious what rules and guidelines and guardrails are you going to put in place around the Protect Ontario Account Investment Fund to make sure Ontarians don't lose the $4 billion invested by the private sector partner?
Well, first off, this is investing in businesses and people that are located here in Ontario. Look, we've set up the Building Ontario Fund, our infrastructure bank with guardrails. We're off to a good start with the Building Ontario Fund, helping to build infrastructure in Ontario. We're going to do the same thing with the investment fund. We still have some more work to do. What we wanted to message today is that we want to invest in businesses in Ontario. And what's really important for this fund, if I think about, for example, in our technology space, we've got some of the greatest minds on the planet in technology right here in Ontario. We provide a lot of funding for research, come up with great patents and intellectual property. And then investors come from around the world and buy up those patents and move the offices to wherever, to the U.S., Silicon Valley, move the talent. I want that to stay here in Ontario. We've got a lot of risk capital here in Ontario. We've got great pension funds and banks and insurance companies, asset managers. I want that money to stay here and invest in Ontario jobs, Ontario businesses in multiple industries. And so we'll make sure the guardrails are in place, but that's the purpose of that fund.
On hospital funding, the OHA said in January that 4% increases weren't cutting it. They said they needed 6% to keep up with inflation, the growing and aging population. They're facing $1 billion structural deficit. This budget comes along and touts an increase of 4%. So how do you expect hospitals to improve without more funding?
Well, first off, I want to thank the many people who work in our hospitals and right across our healthcare system. Incredible nurses, personal support workers, specialists, family physicians, right across the nurse practitioners, right across the spectrum. But look, we've increased the funding for hospitals by 55% over 8 years. 55%. We're increasing it by over $1.1 billion. We've always been there to fund our hospitals. My call to the hospitals, though, to the administrators, to the CEOs, look, we're giving you substantive increases in funding. We've been there. We will continue to be there. Our health sector budget's growing by over 10% this year, 91 billion to 101 billion. What I need them to do is to make sure that every penny we're giving them goes to the frontline healthcare workers that I just talked about for the benefit of patients. And there's lots of opportunities to do that, and they are innovating. They are looking at technology. Just a few weeks ago, I was with the Minister of Health, Sylvia Jones, to talk about putting a platform in place for the 15,000-odd family physicians that they could have one platform. Just think, your healthcare records, you have to agree to it, but your healthcare records then can be interoperable with not only a family physician, but a lab technician or a pharmacy or the hospital setting. So there's a lot of opportunities to deliver more with the funds, the record investments that we're providing the healthcare system.
Richard Southern, 680 News Radio. I know you're building big things in terms of infrastructure, but there's an awful lot of red ink here. Minister, with a net debt projected to surpass $500 billion next year, do you worry at all that you're saddling Ontarians with a bill they're never going to be able to pay off?
Well, first off, it's some of the lowest debt relative to our economy that we've seen in almost 2 decades. So we're performing well there. But just think about when we do borrow money, why are we borrowing? The majority of our borrowing is for long-term infrastructure. I think about my riding, Pickering. It's one of the reasons I got into politics in 2018. For 7 years before we got elected in 2018, not a single long-term care bed was built in Pickering, in Ajax, or in Whitby. That's not right. And so we made a pledge to build or upgrade 58,000 beds. We're halfway on the way. But let me contrast that with the previous government. 0. So when we are borrowing money, it's to build infrastructure that'll outlive many of us in this room. You know, hospitals, schools, highways, subways. That's where long-term care beds. So yes, I prefer to have no debt, but if I'm going to borrow, it's going to make sure that future generations are taken care of.
Minister, the province of Manitoba recently announced that it was doing away with all provincial tax on all grocery items in the grocery store. Why was something like that not considered in Ontario? Because it doesn't strike me like there's an awful lot in this budget to help Ontarians who are struggling to buy groceries every week.
Well, first off, I started off by saying that people are feeling very anxious. It's a challenging world that we live in, and a lot of the uncertainty has hit our shores. So I understand how many people are are feeling the pinch, how they're feeling anxiety about the environment that we're in. And that's why we acted early to put more money back in the pockets of those families and individuals. You know, think over this, just this year, $12 billion of relief for families and individuals. Think about the gas tax cut that we did in the summer of 2022, and then we made it permanent. That puts money back in the people's pockets today. Think about how higher the price of gas would be if we didn't have made that cut. Of course, if you're that woman in Pickering, for example, taking the 407 East or the 412 or the 418, you don't have to pay the tolls. That toll for some regular drivers was $7,800 a year. Now you could be that same person in Durham taking the transit down to the GO station down to TTC. You're paying one fare. That's saving people up to $1,700 a year. So we acted early, and of course, not only that, but yesterday we acted again by rebating the full HST for new buildings. That's $1.4 billion that will also go into the pockets of families and individuals in Ontario.
Hi, Minister. Tina Yazdani with City News. Minister, on this $4 billion investment fund, why are you allowing private investors to call the shots instead of elected officials, and how can Ontarians be sure their money won't be lost on high-risk investments?
Well, we'll definitely have guardrails in place, but let me tell you this. This is how we've set up a lot of our institutions to be arm's length with proper board governance, chair, and a mandate to affect the type of investments we're looking at, prioritizing Ontario. And that's how we set up, for example, the Building Ontario Fund. We've got an independent board. It's following the goals of investing in long-term care, in student housing, in energy. And just by way of example, those funds are then being added to by third-party money. And so it's allowing us to do more with the amount of money we're providing into the fund. So it'll be more than just what we're putting in. And let me give you some examples of what the Building Ontario Fund has been able to do. The student housing deal that was just announced a few months ago for Toronto Metropolitan University, 1,400 new student housing spaces. The president there told me that's more than double the existing footprint they had. We just did a deal with an investor called High Art, where we're in for $300 million, but also other investors are in for $300 million, and banks are providing $600 million, $1.2 billion to buy up condos, of which 2,200, of which 25% will be affordable units. And of course, the small modular reactor investment in Darlington, where we put in $1 billion through that fund. So we have a track record of setting up the guardrails, focusing the investments on priorities for Ontario, and I'm confident we'll be able to do it with this fund.
You've mentioned the guardrails a few times now. If you could be more specific on exactly what kinds of guardrails you're looking at, and also just explain why you're risking $4 billion in a private fund as opposed to putting it into schools and hospitals that are desperate for money.
Well, it's not either or, it's and. We're doing both. We're record investments in education, both operating and capital. Same with healthcare, record investments in healthcare operating funds and capital, some $64 billion. So it's not either or. And when I say guardrails, that's how many of the agencies that we have operate, that we set up like hospitals. They're arm's length. They're run by independent boards. They have a chair. They have a board of directors. They provide the reporting to us. But we let them operate what's best in the best interests of Ontarians, and that's what this fund will do as well.
Mark McAllister from City News. Minister, you have said you're putting more money back in the pockets of families, individuals, and businesses. We're seeing the tax cut for small businesses by another %. You just mentioned acting early and talking about the gas tax cut, but we're not necessarily seeing that direct to taxpayer relief this time around. How do you plan on doing it? You're not handing out checks this time.
You know, what we're doing is, every time we're putting more money back in people's pockets. This year's $12 billion. Let me give you some other examples. We acted early to lower the personal income taxes for the lowest income tax bracket in Ontario through the low individual and family tax credit. We also moved to index Ontario disability support payments to inflation. No government has ever done that before. So that is actually putting more money back in their pockets today because we acted a number of years ago. Same with for seniors, low-income seniors, and we expanded how many low-income seniors can get the guaranteed annual income system. Cutting the gas tax I don't know, some of you may take transit, but some of you may have driven here. Many people around Ontario are driving their pickup trucks or their cars, and they're benefiting because we made the gas tax cut permanent. So that adds up to about $12 billion for families and individuals, about $10 billion for businesses. And as we've just announced, we've done more tax cuts, and we'll keep going.
You continue to emphasize infrastructure spending. You've got $31 billion over 10 years in different highway projects. We still don't have any specifics on any of those individual projects like 413, Bradford Bypass, this 401 tunnel, for instance. What more can you do to break down that number and give us specifics?
Well, we'd certainly give the big number, and we highlight certain projects in the budget. One of the things that's very important that we do is we protect confidentiality. There's commercial interest competing for contracts, so we're not going to disclose that information until contracts have been signed, work has been done. And of course, the public accounts has a lot of detail. I think I've done 8 public accounts. I'm out every 90 days. You're able to ask me all kinds of questions, and that practice will continue.
Hi, Minister. Liam Casey with the Canadian Press. In the budget, it says we have $1.1 billion set aside for 3 years for new investment into home care, which follows a similar announcement from your budget last year. But there's not much more in the budget. Can you elaborate on how that is going to work and where that money is going to go?
Sure. I'll start off by saying that we're a part of our strategy for healthcare is to help people where they want to be taken care of. And I know many people who would prefer to age at home rather than in institutions. So we're transitioning to providing that home care in the home, and so that health care comes to you. Now, where's that money going specifically? And by the way, we also increased it in the fall economic statement. I think we're up to about $6 billion of investment. That money is going primarily to the personal support workers, adding more volume so we can do more to the people, to the nurses who take care of them. So that money is a continuation of a strategy that we started about 4 or 5, maybe even 6 years ago. It's a massive transformation, but I think it's the right thing to do. That's where people want to be taken care of. If they can be taken care of, they can age at home appropriately, and that's why we're going to continue to invest in home care.
You previously mentioned that we're almost halfway there on the build to 58,000 long-term care beds. The budget notes we're at 26,000 new beds that are under construction, built, or approved for construction. So it doesn't seem like a hard 26,000 new beds. We're 2 years away from the goal to achieve the 58,000 number. Is it realistic to actually achieve that goal in 2 years? The math doesn't add up.
Well, we're going to continue to try. We're ambitious here, there's no question, but when you build zero, I think in that 7-year period that I referenced before, 611 new beds were built. That's just not good enough. And I can tell you, in my riding, we've seen the Ajax Pickering Lake Ridge Gardens go up 320 modern new beds right beside the Ajax Pickering Hospital for a community campus of care. We're investing in a new long-term care facility in Uxbridge, right beside the new Uxbridge Hospital that we're going to get. Just in North Pickering, we have just going to open in a few months another 300 or 250 new beds. And I mentioned the Building Ontario Fund before. So that's bringing in other sources of capital along with ours. I can tell you that Peter Bethlenfalvy, a great Hungarian, by the way, spent 13 years trying to get his project off the ground down in the Distillery District. Through the Building Ontario Fund, he's able to get the financing to create, I think it's about 320 new beds in that community. So you know what? We're going to keep going. We're going to keep building, and we'll get as far as we can because it's the right thing to do.
Hi, Minister. Rob Ferguson, Toronto Star. Just picking up on Liam's question there. What are the precise obstacles that are making it look like you're not going to be able to meet that long-term care goal?
Well, I think we're making good progress. I don't know that there's obstacles. You know, you have to work through zoning and municipalities and so on and so forth. But I know that I have seen a lot of activity. We're cutting ribbons. We're going to continue to cut ribbons, open new facilities. I do think as well, it also ties into the home care and community care that I talked about. It's not just long-term care. It's also what we're doing to have otherwise people that the only place would have been a long-term care to bring health care and home care to their home. That's also relieving and providing opportunities for people to age with dignity.
Okay, shifting gears to oil prices that I looked in the budget. They looked pretty good there, so I'm guessing the budget was printed before the Iran
You're
war.
a smart guy, Rob.
Well, you know. Anyway, that's all my lead up to asking, what kind of windfall are you expecting in gas tax revenues?
You know, I haven't even thought about that, to be honest. I think about, the cost of day-to-day life, gas prices. We have no control over that. That's why I think it's really important that we continue to be fiscally responsible, have a strong balance sheet, so we can do the Building Ontario Fund, so we can do the Protect Ontario Fund, so we can invest record amounts in our healthcare sector, education sector, our justice sector, social services. It's not either or. And I'm very proud that we've got the 2 credit rating upgrades, taking us to AA. That's very solid in a very uncertain and turbulent world. We've done our first 30-year Euro bond issue this year, or in the last 12 months, never been done before in Ontario. European investors are betting on Ontario for 30 years. And I'll tell you what, they're also giving us the lowest borrowing costs of any province in the 30-year term. So I think it's important that we continue to keep taxes low, that we continue to invest in our economy and good jobs and our workers, and provide the social services underpinning that economy.
Okay, since that was a pretty elaborate evasion of my question, I just want
I thought it was
one
pretty good.
quickie. So I assume you are expecting some kind of a bump in gas tax revenues because the price of gas is so far up?
No, Rob. It's a fair question, but we could have a peace tomorrow and we could see oil prices go to $50. I mean, who knows? So I'm not going to speculate on the price of oil. I'm going to be there, and I know our government will be there to help people deal with the situation, whatever's around the corner.
Hi, Minister. Colin DeMello from Global News. So this budget really provides a bit of a look back at the first year of Ontario's economy under Donald Trump. Your ministry officials said that Ontario is in the same trade position as we were before Trump. The small businesses were offered $9 billion in tax relief. They only used $2 billion. And of the $5 billion Protect Ontario account, only $1 billion was used. So how can you say that Ontario's economy faced the kind of threat it did from Trump, like you did when you guys went to the election? You said that we were going to face a big threat with Donald Trump. That didn't materialize, did it?
Well, when we did the budget, it was a bit more uncertain. We didn't know what was going to be what happened with CUSMA, the Section 232 tariffs. There was a lot of risk around that, and some industries have been impacted. The good news is the supports have been there. They've helped companies here in Ontario. We've been able to grow the economy. We said 0.8% last year. It grew at 1.2%. That's pretty significant increase over the expectation. And we're going to continue to help companies retool and pivot to a new world where we're going to lean into things like our critical minerals, our energy advantage, defense manufacturing, AI technology, life sciences. These are things that we have right here in Ontario. We've got the talent, the workers. We're going to invest in our Ontario best in class, and that's helping propel our economy. And at the same time, we're going to be vigilant in a sea of uncertainty.
But did your party overplay the Trump threat in order to get reelected in 2025?
Oh, I don't think so. I think when we had the election, I guess it was February. I remember because I'm still thawing out. It was in the winter. And look, Trump had just been inaugurated. And a lot of the measures, the tariff measures, hadn't even materialized. So, don't listen to just me. Look at what economists were saying at the time. I mean, they had projected literally hundreds of thousands of job losses. And very fortunately, that didn't materialize, And I think our job in government is to make sure that we're there. We've got a strong balance sheet. We're investing in the right priorities. And I think we've done that with this budget.
And I just wanted to ask, so you said earlier that you would prefer to have a smaller deficit. Can you tell us what measures you were willing to give up in order to achieve that smaller deficit in this budget?
Well, I think one of the things I talked briefly about, and I'm not sure this is about give up, but I really feel strongly when you invest so much money, and rightfully so, to our healthcare sector, over $100 billion, $40 billion for our education, $20 billion plus for social services. That's, what's that? That's about $160 billion right there. I want to make sure every penny of that $160 billion can get as efficiently to the frontline workers, the social workers, the teachers, the healthcare workers, for the benefit of the most vulnerable in society, our students, our patients in our healthcare system. And I think that's incumbent on government to make sure that we review those and focus on making sure money gets there. So it's not taking anything away. It's being very responsible and smart with taxpayer money.
Hi, Minister. Josh Rubin from the Toronto Star. First question is about the LCBO and the wholesale pricing changes are costing the LCBO ballpark $200 million. How do you make sure that that money goes to consumers and savings as opposed to kind of just, say, going into the bottom line at Loblaws or Sobeys or Walmart?
You know, definitely fair question. I look at it and I say Ontario producers were some of the highest taxed people in all of Canada. It was not a level playing field. So when you modernize the system, one of our principles has been to try to have a level playing field, reduce the taxes and markups, which we're doing, and allow fundamentally competition. That will drive where the money goes. And, you know, we not just did that for producers, but we opened up the retail distribution for convenience stores, for grocery, you know, multiple points of distribution so that consumers have the most convenience and choice. The market can compete, and I think that's the best way rather than government deciding the pricing for everything.
My next question is about the OPG. I realize that's another minister's responsibility, but it is about money. Were you surprised or concerned at all that they managed to lose almost $500 million on the sale of their U.S. generating assets at a time when worldwide power demand is skyrocketing because of AI data centers?
I haven't looked at that transaction. I'd have to look at it, but I think you addressed it appropriately at the beginning. I think that for our Minister of Energy, that's and of course OPG to answer.
Okay, thanks.
Thank you.
Hi, Treasurer. Steve Paikin, TVO. Just wondering if you thought about changing the way you subsidize electricity rates and the subsidization the province offers ratepayers over the past year at any point.
I got to say, folks, I did not see that one coming. Very inside joke. So for those who don't know, he's brought it up every year for the last 6 years.
Because you don't change the policy. So I keep asking about it.
You know, we're reviewing everything. I just talked about, you know, looking at taxpayer money responsibly, and we're going to look at that's among the things that we're looking at to see, can we do it differently? Can we get more value for taxpayer money? I'm not going to presuppose any outcome, but we're going to take a look at many things, including that.
Do you think it encourages people to conserve their electricity usage when you subsidize their power usage?
Well, I do think part of the rebate program and the whole comprehensive program involves as well measures for conservation. So that's part of the program. So that's already built in.
Hi, Minister. Alison Jones with Canadian Press. Further to Colin's line of questioning about the economy performing better than expected amid the trade war, a lot in this budget seems designed to protect against future uncertainty. You talk about that a lot, all these strategic investments, high reserves. What is it that you see on the horizon that has you taking this approach when sort of looking back historically at the past year, we actually did not too bad?
Look, I'm by nature very optimistic, but my job as well has to make sure that we fortify our balance sheet, have higher credit ratings, lower borrowing costs, invest in the priorities. And I got to decide as a finance minister between good ideas and other good ideas and focus on priorities. So my message is when we locked in the budget, there was no war between the U.S. and Iran and that kind of level of global conflict. So we don't know what's around the corner, but I'm going to guarantee you that this government is focused on protecting Ontario, supporting good jobs here in Ontario, making sure we provide the best education for our children in post-secondary, the best health care that we can provide, helping those who are vulnerable and down on their luck, and making sure we address that, all the while being fiscally responsible And I think this economy, I think we're seeing some progress and moving forward in terms of growth. I'm cautiously optimistic, but at the same time, I'm prudent. I think so you can sleep well at night. I'll make sure I keep focusing on that.
Well, thank you. On housing, we've seen housing starts revised downward yet again. Are we at the point yet of acknowledging that 1.5 million homes isn't going to happen? What is a more realistic target for 2031?
No, I'm not focused on the target. I'm focused on what we can do today to make it more affordable for people to own homes. There's lots of things you can do, but certainly rebating the full 13% for buyers of new homes is a big step in the right direction. We're going to continue to make sure that we provide all kinds of supports to get more housing built. It helps with affordability. I know a lot of construction workers. They are very happy with our move yesterday because that's putting them to work in an industry that's seen quite a slowdown. So we're going to see some activity there. It's some 21,000 incremental jobs, 2.7 billion in our GDP. So I think I'm not focused on the target. I'm focused on right now what we can do to help people and keep our economy moving forward.
Hi there, Alan Hale from Post Media Network. The budget points out that we're going to be starting field work for this 401 tunnel in the spring. And I'm just wondering if you could explain why this project is still going ahead. You are expanding the deficit and pushing back, getting to a balanced budget. And it seems like there's a big consensus out there that this tunnel is kind of unrealistic and would be insanely expensive. Why are we still going ahead with this? Is it like a pride thing that you don't want, that the Premier doesn't want to be seen backtracking on this?
I think it's premature to make that conclusion. All we've indicated is that we're looking at the feasibility of that. So we have to wait for the results of that feasibility study.
Hey, Minister Barbara with QP Briefing. I want to ask you about waiving the HST for all home buyers. You seemed reluctant to do that at first. It took a while for the government to go forward with this. I'm just wondering, why did it take so long, and what happened that made you change your mind on this?
No, I'm not reluctant at all. I'm always looking at all options. I can tell you that discussions with the federal government, I just believe when you work together and you do things together, it's way more powerful. So I'm very pleased to see the Finance Minister of Canada speak to this morning, and the Prime Minister supporting us. A big thank you to them, because I think they, like us, understand that focusing on affordability, focusing on our housing industry and construction jobs and good jobs in our economy is the right thing to do.
And are you still committed to building 1.5 million homes by 2031?
I think I just addressed that question. I'm going to be focused on doing everything in our toolkit, whether it's regulations, whether it's tax cuts, whether it's continued work on working with the federal government to work together to find ways, whether it's development charges or regulations or getting more built. So we're going to continue focused on what's right in front of us.
Hi, Minister. Siobhan Moore, CTV News. What are you planning to do on Bremner Boulevard that you're changing the bus parking requirements on that lot across from the Rogers Centre?
Well, I think that's the Bremner Boulevard. That's from a long time ago and served a different purpose. I think there's a tremendous opportunity there. So we're going to make it create a situation where we can have more options with that piece of land, which is in a prime piece of location of Toronto.
Hi, Lorenda Redicop, CBC News. Servicing the debt, it's the fourth largest expense in the budget, more spending than you're spending on post-secondary. How do you justify that?
Well, I'd like to spend less on interest, and you know what? We've done a pretty good job. It's well below our target. We've had some of the lowest interest expense to revenue, actually since the 1980s, so we're doing pretty darn well there. One of the challenges is global interest rates have gone up, so our forecast on interest rates has increased. So that's going to cost us more, but I prefer paying as little as possible to bondholders and putting more money back in everyone's pockets.
Hello, Minister. Mirna Djukic for Radio-Canada. I just want to go back to your explanation for the deficit. You said this is just the state of the world right now, but we just heard that the economy performed better than expected and that the tariffs had less impact than expected. So can you square that for me?
Sure. I was talking about 2025, looking in the rearview mirror, we outperformed. Looking in the windshield and looking at the future, the GDP forecasts are lower. They're set by the private sector. And also, we have to look at, I really think you've seen it right across the country. When you increase the population like we have right across the country, it does put pressure on your social services. 80% of my budget is social services. It's healthcare, it's education, it's justice, it's the social sector. So that has put pressure on the expenditure side. But, you know, we're not going, this budget does not do any cuts. You know, you look across the country, many provinces have cut not only their public sector workers, but their broader public sector, and committed to do that. We're not doing that. We believe in investing in our people. We believe in doing it responsibly. I think the credit rating agencies recognize that, and that's why we got the credit rating upgrade and have some of the lowest borrowing costs and lead the country, and we'll continue in that vein. That's our strategy.
This is the last question.
Hi, Lane Harrison, CBC News. Just go back to the LCBO. I know it's a priority of your government to expand alcohol sale options, but the LCBO has been seeing hundreds of millions of dollars in reduced revenue, largely as a part of that in recent years. So is it your view that it's better for people to be able to buy beer in a convenience store than for those millions to be in public coffers?
No, I think we have millions in public coffers. We have a budget of, I think we're over $225 billion in investments. But at the same time, you know, our LCBO revenues, which are just under $2 billion, and I expect them to grow from the numbers that we've posted. But the world is changing as well in alcohol. Many are consuming less. Younger people are consuming less. Those who are consuming are shifting from spirits to ready to drink. So consumption patterns are changing. Of course, we pulled the U.S. alcohol, so that's changed the mix, and it's been a boom for our local producers. But that's a different margin on, let's say, that product versus something we're shipping in from California or Kentucky. And this is the world we're in, but I feel very confident. I want to give a big shout out to the workers at the LCBO. Folks, they've gone through a tremendous amount of change over the last couple of years, modernizing a 100-year framework. In fact, next year it'll be the 100th anniversary when the LCBO was set up. And I'm very proud of the workers at the LCBO. I'm very proud of our government for modernizing, giving people more choice. And you think about the convenience stores. They've said this is a game changer. They've been able to increase their revenues, hire more people, see more activity. And why shouldn't they have that opportunity? I grew up in Quebec. When I was growing up, and I was the legal age, I could go into the local dépanneur and get a case of beer or a bottle of wine. This is the world that makes sense. It has had impact on our revenues because of the consumption and behavior, but I'm very proud of the LCBO.
This concludes our media event. Thank you, everyone.
Thank you, everyone. Have a great day. I'll see you a little bit later.